Traders, and welcome to another video review. Today is Wednesday, February 2nd, 2022. We are going to start with the Forex calendar as usual. What do we have here? The first thing is that the most important data had been published already. We got even the speech from the RBA Governor Philip Lowe overnight. So we will take a look at the Australian dollar first. But during the London session, as you can see, there isn't much data scheduled for release except the consumer price index and core consumer price index from the Eurozone, which is scheduled for release at 11 a.m. Consumer price index is expected to drop from 5% to 4.4% in the month of January, which is very interesting because the inflation is increasing across the Eurozone, across the US and the rest of the world, basically. So the expectations of the market participants to for the consumer price index to decrease are very interesting. We will see how this will be figured out. Consumer price index, the core consumer price index, as you can see, is expected to drop as well from 2.6% to 1.9%. So just for very beginners on the Forex market, please be informed that the consumer price index is a very important measure for the European Central Bank that will look, of course, for the consumer price index or producer price index and stuff like this for the inflationary pressure in order to adjust the interest rates accordingly, right? And on the other hand, the European Central Bank and the rest of the central banks in the world will look at the Federal Reserve as well, which, as we know, since the last Wednesday, said that it will increase the interest rates this year. The first hike will be in March. Maybe there will be more. The market participants are expecting 4 more hikes in this year. So that's just a little bit of the information for the beginners. Anyway, during the New York session, we got the ADP Northam employment change from the US. We are expecting a huge drop from 807,000 to 185,000, and we got the crude oil inventories scheduled for release 4:30 for all of you crude oil traders. Some of the PMI manufacturing data from Australia are scheduled deep in the night for release 11 p.m. So let's take a look at Australia to see whether the RBA governor made something here on the charts. The Australian dollar on the daily time frame chart is still heading up. Currently, the market passed the 38% Fibonacci retracement. We don't need that anymore, and it's trading around $7,143. So this is the level when we should expect the continuation of this down move, right? So that's the first thing. The other thing is we might, however, jump towards 61%. And 7,183 level might be tested, and then we should see a decline towards the low, and then even below this low here. So please keep an eye on this level. We will see what the response from the market participants will be. Very interesting zone between 50 and 61, tight zone, 40 pips only, so please keep an eye on this zone as well. We will definitely take a look for something we didn't look as much recently, for the British pound. What is British pound doing? Is behaving exactly as our arrow indicates. So the bounce from around 61% of the Fibonacci retracement of the last wave to the downside. So this is that wave. This wave retraced 61% of this up wave. As you can see, there was a very nice signal in form of the pin bar candle. This looks like even almost like a doji, like gravestone doji. On the daily time frame chart, very interesting signal. Then we have a retracement, 61%, 1.3384, even lower towards the technical support, because the low was made at 135.57, and 3 days in a row we are bouncing higher. Right now we broke above the 1.3515, which was the technical resistance. Next target is 1.3568 and 1.3605. So those two targets are those two technical resistance are next targets for British pound. It looks like the momentum is helping the bulls, because it's now above the level of 50, so it's getting very much very stronger, much more stronger than it was before. But please remember the fact that in order to continue this move here, this up wave, we need to break above the high, and the high is at 1.37 and 50. So everything that goes here is just a retracement really of that move here. Okay, so as long as we are not trading above 1.3750, everything what's happened here is still a retracement, which is why we are looking at those technical resistance levels, despite the fact that the momentum has made a very nice rebound, and it's now positive, and it's getting a little bit stronger. So that's the British pound to American dollar. Let's take a look at the US dollar to Japanese yen. US dollar to Japanese yen at the daily time frame chart doesn't do much, and the reason for that is after the I got this trend line here. As you can see, market prefers the technical support, which is why I put my blue arrow here to indicate importance of this technical support. The market doesn't do anything because of the lack of a conviction of the up move, right? This move here, 115.53 pips, has ended with a pin bar candle. 3 days in a row we are going lower. Possibly we will go back below this trend line towards 1.13 and 50. So please keep an eye on the US dollar to the Japanese yen pair. It looks still very much bullish here, especially after 109.21 it has held the bearish pressure, and since then we've been moving up very nicely. However, this pattern here looks like a topping pattern, some sort of the maybe inverted head and shoulders, or something different. Nevertheless, it doesn't look bullish. Something else is going on here, some kind of a distribution I can see here, because every time we touch 115 we have a sell-off, then we have a breakout, then we have a sell-off again, then we have an attempt to rally, then we have a sell-off. So it looks suspicious right now. It looks suspicious, so please keep an eye on the US dollar to Japanese yen as well. Let's take a look at silver. What is silver doing? Daily time frame of silver is showing us the recent market behavior above the 61% of the Fibonacci retracement, so 23.86 has been violated. Nevertheless, the market did not move above the swing high at 25.37. So it looks like we are still moving up, still moving higher. We got the higher high here and there. Nevertheless, the market is unable to do the swing high. All of the highs are so-called local highs. This is very important technical support for silver, 21.84 to 21.39, because if we break below this support, and it looks like we are going lower, because this is clearly the downtrend. Look at this. This is 2020. Those prices were last time seen 2020 and then 2021. And we already touched these prices. So please be informed that this situation looks not very good for bulls at all. It was a nice rally in 2020, in the middle of 2020. first attempt to break lower, second attempt, new high, and then we have a first attempt after new high was made, second attempt. So it looks like it's just a matter of time when the market of silver will break below 21.39, and then the next target is below 20, because if I can see some of the important technical support, it would be around 1965 to 19. So please pay attention to the current market developings on a daily time frame chart on a spot silver market, because silver is unable to take out the last high, which means is basically the market that is moving lower in order to continue the downtrend. So 1, 2, 3, 4, 5, 7 days in a row, as you can see, we've been traveling down, moving lower from the extremely overbought market conditions. So this is strictly a bearish market. Please pay attention to this zone here, because we might witness soon enough sell-off of the silver. And last but not least, let's take a look at Bitcoin. The Bitcoin is still following our path, and it still doesn't want to move above the level of 39,000. So basically the 40,000 mark, the 40,000 level is still not touched by Bitcoin, and this movement is clearly corrective, and still the main move, the main cycle, the main road for Bitcoin is down towards the new lows below $30,000. This scenario is correct as long as we trade below this zone, which is roughly $40,000. 39,540, 41,188 is the zone, to be exact. As long as we trade below the zone, the down move might continue. Maybe the zone around the $30,000 will be attractive enough to bounce higher, right? But for now, this is the key zone here, and we are still going. We are possibly still the chances for going lower are higher than the chances for going higher, because of inability of bulls to break above the supply zone. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.